Just because the stock market has hit an all-time high doesn't mean we have to leave the market or reduce our stock holdings. I think we can sum it up like this. I think this is something we should keep in mind. And over the weekend, there was a major catalyst in the United States stock market. The news that President Trump's big and beautiful bill has gone into effect. Now, this bill mainly focuses on reducing corporate taxes. Therefore, it's often seen as a positive factor that could boost corporate earnings. However, in my view, there are clearly both beneficiaries and those who will be negatively affected, and that's how I'd like to summarize it for you. So, through this article, I'd like to talk about which companies among my personal top picks could benefit and which could be negatively affected. President Trump signed a $3.4 trillion budget bill, which we call One Big Beautiful Bill. This bill includes large-scale tax cuts, the suspension of incentives for renewable energy and electric vehicles, and cuts to social welfare budgets. So the important thing is that there are a lot of tax cuts. The fact that it provides $4.5 trillion in tax cuts is a positive aspect. However, at the same time, the suspension of incentives for renewable energy and electric vehicles can clearly act as a negative factor. Large-scale tax cuts and corporate tax benefits, I've pointed out these two things here. The first is 100% bonus depreciation. Everyone, if you've studied United States stocks or even elementary school, you know about depreciation expenses, right? What we usually call capex is when we invest a large amount of capital, and the cost of this is divided and expensed each year. This is called depreciation expense. Now, what is the 100% bonus depreciation shown here? It means you can use this depreciation expense to deduct from your taxes. You can process all of that in just 1 year. That's how you should see it. Here's another thing. You can immediately deduct R&B expenses as well. R&B expenses can also be a significant cost, but under the revised law, you can deduct the entire amount in the first year, instead of spreading the tax deduction over a long period. That's how the law has been changed. So, tax cuts and corporate tax benefits definitely exist. So if you look at these aspects, it can stimulate expectations for improved corporate performance and increased investment. So what does risk on in the stock market mean? It can strengthen the preference for risk assets, so we can summarize these as positive aspects. However, in the mid to long term, concerns such as fiscal deficits and rising interest rates are emerging. That's because there's a very high possibility that the United States government's debt will surge. If that happens, there's a high chance it could lead to things like interest rate hikes, a weaker dollar, and foreign investors pulling out. If the government's debt gets excessively high, naturally, from the perspective of foreign investors, it's a bit unsettling. So if there are a lot of anxious investors like this, the dollar could fall, and there's even a possibility that investors might pull out completely. Now, if you look here, there's a possibility that interest rates could rise because rising interest rates mean that government bonds are losing popularity. So you can see it as the United States losing its appeal. And also, in order to handle this debt, they may have no choice but to issue additional government bonds. Increased government bond issuance raises supply. Per supply and demand, higher supply lowers price. Lower bond prices mean higher yields on government bonds. So, this increases the attractiveness of United States government bonds as a safe asset, which has a negative impact on the stock market. Now, when interest rates go up, the interest you earn increases. So, when the interest on safe assets goes up, their attractiveness increases. As a result, relatively risky assets are negatively affected. Now, nevertheless, this bill, it could be a huge benefit for certain industries, while bringing a fatal blow to others, so the market is clearly divided with winners and losers by industry. Personally, that's how I see it. First of all, I think industries like semiconductors, artificial intelligence servers, biotech, and automation could benefit from the tax cuts. The reason is, as I mentioned earlier, these are industries that rely heavily on facility investment and R&D. Therefore, for industries that invest heavily, this is significant. It's beneficial as they can get more audits, so you can view it from that perspective. On the other hand, for sectors like renewable energy, electric vehicles, and healthcare, you can see that they are inevitably impacted by the suspension of incentives and Medicaid budget cuts. I've summarized the potential impact of the $3.4 trillion budget bill signed by President Trump on the United States' main topics as follows. First, let's discuss the main beneficiaries. Palantir is one of them. Now, the reason is that this bill specifies hundreds of billions of dollars in new military funding and increased spending on immigration enforcement. As you know well, Palantir is a data analytics company whose core clients include the United States Department of Defense, intelligence agencies, and the Department of Homeland Security. Therefore, if government contracts are expected to increase significantly, Palantir's earnings could improve. These factors make it a beneficiary stock. Now, the second one, VST, is it pronounced Beast? The second one is Talon Energy. Now, the reason I selected these two companies as beneficiary stocks is these companies have a power generation portfolio centered on traditional energy sources like natural gas, nuclear, and coal. Now, this bill stops incentives for renewable energy and electric vehicles. Therefore, the price competitiveness of alternative energy sources like wind and solar will inevitably weaken. That means they'll become more expensive. When wind and solar become more costly like this, it can directly benefit traditional energy companies. That's how you should see it. The third one is Uber. The reason Uber is considered a beneficiary is because the new bill specifically includes new tax breaks for tip workers. Now, what about these items? They can provide direct benefits to Uber drivers. It therefore boosts the platform's appeal. You can see it as having the effect of reducing potential regulatory risks. Now lastly, NVIDIA and its friends, those friends being Advanced Micro Devices and Broadcom. NVIDIA is a company that generates massive profits based on a net profit margin well over 50%. So, as a result, they stand to benefit the most from the overall tax cuts included in the bill. The more profit you make, the more you benefit from tax cuts. It's only natural. And also semiconductor companies. They can get up to a 35% tax credit for production facilities and investments in the United States. So they're in a position to directly receive these large-scale tax benefits. Therefore, you can generally consider semiconductor companies as beneficiaries. 100% of manufacturing facility investment costs can be immediately expensed through depreciation, and renminbi costs are also immediately deductible. Because they can enjoy these additional benefits, it is my personal judgment that all advanced semiconductor manufacturing businesses can benefit. All right, next are the main companies that are negatively affected. The first is Tesla, and the second is Nextracker. Tesla is the most obvious company to be negatively affected, because the main point of the bill is to stop incentives for electric vehicles, which will directly hit Tesla's core business. If the subsidies disappear, the actual purchase price for consumers will go up, so demand will inevitably slow down. This could have a seriously negative impact on Tesla's growth outlook and stock price. Nextracker also had a very good stock performance last week, but negative factors are still looming. That's because this company manufactures tracker systems that help solar panels efficiently follow the sun. And this bill clearly states that it will halt investment in solar power plants. Therefore, there is a high possibility that large-scale solar power projects will be delayed or cancelled in the future. If that happens, Nextracker's orders will decrease. Therefore, it is expected to have a direct impact on their performance. Now let's take a look at the United States stock market futures trend ahead of the opening this year. First, the Dow Jones is showing a sideways movement at 0.029%. S&P 500 futures have dropped by 0.22%. And finally, Nasdaq futures are also showing a relatively large decline of 0.37%. Now there's a reason why the movement of the futures index isn't good. There was some negative news. First of all, the Trump tariffs will take effect starting August 1st. Originally, they were scheduled to take effect this week on July 9th, but it's good that they've been postponed to August 1st. However, the delay is only about 3 weeks, not even 4 weeks. So you could say that more investors are now worried, thinking that it really will be implemented this time. Recently, negotiations have been underway with various countries, but there are growing concerns about whether all these negotiations can really be concluded within 3 or 4 weeks. President Triumpo made a single comment this time. Any country that opposes the United States or supports the Brazil, Russia, India, China and South Africa countries' policies will face an additional 10% tariff. He said something this terrible. The Brazil, Russia, India, China and South Africa mentioned here is a group of countries that oppose the global order centered around the United States. The B in Brazil, Russia, India, China and South Africa stands for Brazil, and it's a group formed by Russia, India, China and South Africa coming together. Recently, countries like Indonesia and Iran have been joining as well. But this time, over the weekend, the Brazil, Russia, India, China and South Africa countries gathered and talked a lot about criticizing the United States. For example, they said that tariff policies are shaking the global economy, and they also made some very negative comments about the attack on Iran, which upset Trump. That's how you can see it. Now, let me briefly share my personal opinion on this. About President Trump's remarks this time, the difference is that he considered the entire massive economic bloc called Brazil, Russia, India, China, and South Africa as a potential opponent. It's not the usual United States-China trade conflict or tariff negotiations with a single country. Since he targeted several countries as one group, this can be seen as a negative factor that could increase market concerns. The additional tariff threats against Brazil, Russia, India, China, and South Africa countries suggest the possibility of new trade disputes. And the market really dislikes uncertainty. I wish we could stop talking about tariffs, but now a new issue has come up. So in the short term, you can expect increased volatility. However, Trump's remarks are described with the very vague term anti-American policy. And it's highly likely that this is more of a pressure tactic to gain a favorable position in negotiations rather than actually imposing tariffs. Moreover, the market is already quite experienced with this. In the past, we've seen this pattern repeat itself, making strong statements, then moving negotiations forward and postponing things. So the market is very familiar with this pattern now. So what about when the S&P 500 is near its peak? These kinds of geopolitical risks can serve as a catalyst for a short-term correction. That's what happens in the short term. However, if the fundamentals of the United States economy are strong, I don't think it will lead to a major downturn. What I'm saying is, there's no chance of a bear market happening. So, as I mentioned at the beginning, even though there are various negative factors right now, I think it's just a temporary adjustment, just a passing breeze. That's how I would like to assess the situation. The last content prepared for today is the Miju on podcast. Now, the stock that my wife and I will analyze with our voices on the podcast today is not a Miju on top pick. We made a podcast based on an analysis article about Coinbase. Coinbase is implicitly taking over financial services. I think it would be good for you to listen and find out what it's about. Now, I sincerely thank everyone who stayed with us until the end of today's broadcast. Let's all keep fighting together until the day we all retire through investing in United States stocks. Have a happy day. Thank you. Hello, did you start your day well? Today, although the stock market broadcast is taking a break, we can't afford to rest. Many things to do to prepare for these 2 weeks. We should stay positive today too.
Hello everyone. Did you enjoy participating in the live broadcast yesterday? I hope this was useful for your investing. Today it's the stock that Mi Joo-hoon mentioned previously. Let's take a look at the Coinbase analysis article. The title is Coinbase is implicitly encroaching on financial services, which is quite provocative.
Yes, this is about Coinbase, ticker symbol COIN. Personally, it's a stock I've been paying close attention to as well. Yes, I think the main point of this article is that you shouldn't just see Coinbase as a stock that simply follows the ups and downs of cryptocurrencies.
There's more to it than that.
That's right. Cryptocurrency is fundamentally changing traditional financial services, and you have to see the bigger picture that Coinbase is at the forefront of it.
That's exactly the point, and Coinbase Chief Executive Officer Brian Armstrong said just that. He said that within 5 to 10 years, they will become the world's top financial services app.
Yes, that's quite ambitious. He said the reason is that cryptocurrency is taking over financial services, and because we are the best cryptocurrency company, I don't think this just means they want to run an exchange. So the concept that the article points out is disintermediation, which is called disintermediation in English.
Disintermediation is a bit challenging.
So in the past, there was a regulation called Regulation Q in the United States that regulated banks. But when that was lifted, things like MMFs suddenly became popular. Similar to how travel agencies declined after the internet, it's about eliminating costly and time-consuming intermediary steps.
It's about removing the middle margin, correct?
That's right. Coinbase is trying to drastically reduce the complicated middle processes of financial services using this blockchain technology.
They want to change the landscape of traditional finance. But do you really think that will happen? What do you think is the biggest driving force that could make that disruption scenario a reality?
It's probably the power of the technology itself and how Coinbase has managed to grow so well. They began as a Bitcoin exchange in 2012.
Yes, that's how it was at first.
Now there are numerous coins, custody wallets, institutional services, and derivatives. They've become a comprehensive all-in-one platform.
Binance leads in trading volume, but customer assets under management reveal a different picture. By that measure, it's said to be the 21st largest bank and the 8th largest securities firm in the United States.
It's grown much bigger than you might think, especially...
Unlike other exchanges, they appear to cooperate with regulators and offer a user-friendly platform. These are some of their distinguishing features. That's right.
So among people who invest in cryptocurrency, it kind of feels like a more conservative choice. Yes.
But if you look at the monthly trading users, it's still very volatile depending on the cryptocurrency market.
That's inevitable. The market volatility is reflected as it is. But recently it feels like the atmosphere is changing a bit. There are some pro-cryptocurrency discussions, and it seems like we're seeing some growth again.
I see. Then, in Coinbase's business model, staking and stablecoins seem really important. What are they? Could you explain them in simple terms?
Yes, staking is, simply put, when users entrust their coins to help operate the blockchain network, like for validation and such.
Is it similar to depositing money in a bank?
That's right. Then, in return, you get rewarded with coins like interest. It's good for users, and Coinbase takes a fee in the middle. This utilizes the capabilities of a decentralized network.
Oh, then what about stablecoins?
Stablecoins, as the name suggests, are coins with stable value. Usually their value is fixed one-to-one to real assets like the dollar.
So it's a coin without price fluctuations? Yes.
United States dollar coin issued by Coinbase and Circle is a prime example. If you use this, you can send and receive money or make remittances on the blockchain without worrying about price fluctuations.
So this is like a bridge connecting the crypto world and the real world?
That's correct. And Coinbase also invests the dollars that users deposit and earns interest from them. Wow.
Then how important is this staking or the stablecoin revenue model to Coinbase's vision of disrupting financial services? Wouldn't it be a bit vulnerable if things like interest rates change?
We have to say it's very important. It's not just simple transaction fees, it's a steady source of revenue. It's a key factor that increases the value of the platform itself. Of course, the profit from operating stablecoin reserves will be affected by interest rates.
That's right, but...
Staking fees or the effect of attracting people to the platform itself, these can be another engine for growth. Blockchain technology itself has significant power when considering the bigger picture.
The potential of the technology itself.
Yes, the article also gives examples like Walmart tracking food origins, Pfizer verifying the authenticity of medicine, and things like real estate registration. These examples show how efficiency is increased by removing intermediaries.
There was also a brief mention of the mystery of Elan de Soto's jargon. Is proving ownership really that important?
That's right, and blockchain can prove ownership much more efficiently. This has the potential to change the world.
But if you look at the financial statements, the quarterly revenue and earnings per share are just a complete roller coaster. They say it's really hard to predict.
Yes, that's right. The volatility is really extreme. It just follows the cryptocurrency market exactly. Some even say analysts have given up on making predictions. But what the article is focusing on now is not the short-term performance, but the expected growth rate going forward. The projected growth rates for sales or earnings before interest, taxes, depreciation and amortization and earnings per share are much higher than the industry average.
They view future growth potential favorably.
Yes, and if you look at things like the debt ratio or return on equity, it seems that even in the midst of all this volatility, the company is being managed relatively well. The fundamentals are pretty solid.
So then, what do you think is the biggest risk?
The biggest risk would be if this whole plan fails. Cryptocurrency or blockchain technology may not be as significant as initially thought, and Coinbase's vision could end up being just a dream.
So the whole game could just fall apart, right?
Yes, that's correct. Investing in technology that could change the world always comes with that kind of risk. So when this article gives a buy recommendation, it's not really predicting what the price of cryptocurrency will be right now. It's more about betting on the long-term story that Coinbase will truly innovate finance through blockchain. Right now, it's really hard to judge whether the stock is cheap or expensive, but if this vision actually becomes reality, then looking back, today's price might seem incredibly cheap.
I see. In summary, Coinbase isn't merely a platform for trading cryptocurrencies. It's a company with a grand vision to revolutionize financial services through blockchain technology. Yes.
Today's deep dive into Coinbase was truly captivating. That's the main takeaway. Lastly, I'd like to ask you all this question. If blockchain technology truly changes the way traditional finance, like banks and securities firms, operates at a fundamental level, how do you think your investment portfolio or even your everyday financial life might change? Why not take a moment to imagine that? Really,
It feels like there could be some major changes, but I think we'll have to keep a close eye on how friction and regulations with traditional banks continue to evolve. That was really interesting and informative. Thank you for joining me again today.
Starting dreams often is important. Let go of your greed, grow little by little every day, and enjoy today's journey. Even if dark times come, I'm not afraid. Retire with United States stocks.